It is March 19th, 2021, Friday morning, and the markets are about an hour and a half away from opening. Futures markets trading a little bit up this morning after a pretty down day on Thursday. This is the quadruple expiration date, Friday, quadruple witching Friday, so it's going to be probably a lot of volatility in the market. It's already been some volatility in the pre-market, as you can see. I've done some trading in the NASDAQ, and you can see it's a pretty busy screen. A lot of trades in the pre-market session. So right now I'm currently holding six micro E-mini NASDAQ contracts. This is the 1 minute chart. And I've been in and out of trades all day, mostly scalp trading. But I had a net increase of one contract, which I purchased higher than where we're trading currently. My current account balance, as you can see, is about 41,300. And quick glance at the futures. These are delayed quotes. You can see the Dow's up, NASDAQ's up 70 some odd points. And right now, Airbnb is a little bit higher, one of my favorites, but it's still under $200 a share. But that's not bad. I mean, this was an IPO not long ago, and it doubled its opening price, and so even at 194, that's a pretty nice move. For me, I'm still up a little bit on it. When it gets below the 180s, then I'm taking a hit. Neo continues to struggle, but it is up in the pre-market session by almost a point and a half. Bitcoin is up as usual. I wish I could trade that. I haven't quite figured out how to trade that yet. And S&P 500 is kind of steady. The Russell Micro E-mini 2000 is headed higher. So while the volatility in the NASDAQ, it's all about interest rates, concerns of Fed hiking rates, and inflation. The bond yields continue to go higher. And what happens if the bond yields go higher, it gives people an alternative. I'm talking about people with massive amounts of money. It gives them an alternative place to put their money without risking capital. So it's kind of a double whammy. You get the higher yield, so that gets more attractive to these folks with huge nest eggs, because they can finally make some money in something that offers very little risk to their capital. And so they pull that money out of the stock market, and then the stock market gets volatile. And then that encourages more money being pulled out of the stock market and put into safer instruments. So that's how it kind of results it can result in a meltdown of the market. However, the stock market has proven to be resilient over the years, and what seems like the end of the world one day, 2 weeks later, can be nearly forgotten about these days. So it's, after last year, I was pretty amazed at how the market held up with a pandemic that literally shut down the world. You know, you got to wonder, what would it take to really make this stock market collapse? If it could survive that without, and actually end the year higher, um, that to me is amazing. Um, but the market is so unpredictable. It's a roller coaster. You don't know when the bottom's going to fall out or for what reason. The economy could be strong, moving ahead, and that's a big fear of the market. The economy gets stronger, then you worry about inflation. Um, 2008, the year was halfway over before I had any idea of why the market just kept crashing all the time. And then finally, you know, this, well, there was just, it was all about banking and mortgage rates, I guess bad mortgage loans that were out. But, it just amazes me that, a collapse in the housing industry could devastate the market as much as it did in 2008 and early 2009, whereas a pandemic that shuts the entire world down only caused havoc for a couple of weeks in the market, and the market came back stronger than it it ended up at the highs of the year. At the end of the year, it was at all-time highs. And had strength throughout the year. I mean, from I think August through the end of the year, the market was just very strong. So, you know, you can't predict this market. You cannot predict it. All you can do is try to make wise decisions. You don't want to just gamble and go all in and then hope that it goes up. You want to be strategic, and you don't you don't want to lose all your money because you just thought, well, if I just throw all my money in there, a couple of months from now we'll be higher than where we are now, and I can take a profit. That does not necessarily happen. It doesn't necessarily happen that way. So the best thing to do is, be strategic, watch the market, get a feel for how it moves up and down, and when the odds are kind of in your favor that the move is going to be back in the up direction. And that's kind of what I did on this dip. Even though I didn't do much, I had 5 contracts yesterday. I took a beating. And now I have 6 contracts. So I only added 1. But I'm thinking, and the way things look right now, my thinking's correct. I'm thinking that, we'll probably get some kind of rebound at this point because the NASDAQ has been devastated except for Tuesday when the Fed announced rates staying the same and we had a kind of rocket higher in all the indices. The NASDAQ has just been punished for the last month. So at some point, we're going to get a nice little rebound in the NASDAQ. And after a big fall like yesterday, my thought is that the odds are likely that we're going to go higher today. but it doesn't have to happen. We may end up lower, and we may end up having another horrendous day in the market in the Nasdaq, and I'll be ready for that. That's why I only have one more contract than I had yesterday, so that if things don't turn out the way I'm hoping they will, I mean, right now it's looking good. You can see the green arrow. This is the 1 minute chart, of course. It's not as dramatic on the 15. If you look at the 15-minute chart, it's just a small bump higher, and we're still well under that 200-day moving average, the red line up there. So, but anyway, at the moment, the move is going in the direction that I favor, and the hope, so adding that one contract's not gonna make me a fortune overnight, but it will. It will help me certainly if we continue higher. It'll be a significant help if we have a significant move higher. So and plus it gives me something that I can sell that contract. I can sell it right now and get a little bit of profit from that one contract. It wouldn't be much, but it would be a little bit, and then I could buy it back if we dip back down. But I'm comfortable holding it because I didn't put so much in the market that it's gonna be a disaster if the market goes against me. Like right at this moment, we're kind of got a red candle going on, and if we crash again today, then I still have room in my account to buy more contracts. And if we go up and we make up for some of the losses that we've had over the last several weeks, and we have a huge up day, then I can sell that one contract and lock in a little profit there. So that's what I mean by just strategically trading the futures rather than going all in and just hoping that things will go your way, because that's how you end up wiping out your account, and then the market will go up once you're devastated in your account. You've been margined out. Your broker sells your contracts because you're not meeting the margin requirements, and then you have zero contracts, and then the market goes up 300, 400, 500 points, and you're left behind. It's kind of hard to it's kind of hard to recover from something like that. So that's what you don't want to happen. You always want to invest an amount that you can handle, no matter what circumstances. No matter what circumstances. Now if we have a major depression and the market just crashes, the bottom falls out, and it just plummets. We've had some days like that. I think it was in 85 or 87? 87, I think. And then again, 2008, 2008, 2009 were bad years, and you could have lost a significant amount of money. I could not believe how low the Dow went in 2009. I mean, it was all the way down to 6,000 after we had gone up to around 15,000. I mean, it was just an incredibly low number to see, in a new century, in 2008, 2009, 2009. I just didn't expect the Dow to go down that low. And that's when I thought, wow, it's better to at least have the option of being on either side of this market. Because think if you had a short position when that happened, you would have made a ton of money. Now, I don't tend to carry short positions for long periods of time. I'm a bull, but I do have that option of shorting the market if I desire to. Just nice knowing you have that option, and it's very easy to do with futures, easier than in any other. I mean, you can buy puts with options. You can sell stock short, but opening a short position in futures is a click of the mouse. You're in and out as fast as you want. You could always test those waters. I like being a bull. I like staying on the bullish side of things. I don't like hopping around a lot from bull to bear. But, under some circumstances, I will take on a short position, particularly if I'm making a lot of money in a bullish position. I'll usually hedge that at some point with a bearish trade, with the bear trade of a smaller size, just so that if the market turns, market makes a turnaround, some bad news comes out, all of a sudden knocks the market down. It's a way of kind of locking in. It's kind of like a security measure. If that happens, then your bear position will make money, and you can it'll help your bull position ride it out. Kind of offset some of the losses that your bull position might incur. So just look around the office. You see a little artwork in the background. Got the 6 screens on this side. It's on the desk. And then crossover, you see on another desk, I've got the other 6 screens. Now all these screens are hooked up to one computer, my orbital computer, which I've had for years now. It's been one reliable computer. Got my Benzinga Pro on this screen. And got my GVM soft lamp over here. Ball cap. More computers. Another desk. Big copier. And me. Okay, good trading. Happy trading. Let's make Friday quadruple witching or quadruple expiration day a profitable day.